after some technical difficulties since Matt doesn't come on anymore. He doesn't know how to set up his audio, but we got Matt from Mojo Mindset and we got Dylan here. So good morning, fellas.
Good morning.
Morning. Good morning. Thank you,
Yep,
Mark,
yep.
for those
It's been a
kind
while.
words.
Well, because Joe's giving me shit in the comments already, and I'm late, and I have to point out that it was you. So, but
No,
yeah,
that's
thanks
all
for
good.
doing this, man. It's been a while, but quickly, I don't know. You guys haven't met, that's why yet, right?
No, we haven't met yet.
Yeah. So
I
No,
did.
first
I sent
time.
him a DM on Instagram just to get acquainted first before we started this.
oh, cool. And I thought you guys are actually both studying for your guys' real estate license. I think Dylan actually is going to test today, Matt. So I know
Oh,
Matt's
shoot.
been studying.
Dude,
Yeah, I
good
got it
luck,
at 1
man.
p.m. Yeah, thank you.
Oh,
So,
nice,
so
man.
straight from here, he's getting educated, and he's going to go straight to take his exam.
Dude, so good. So good. What state?
Indiana.
Okay, nice. Nice, man. Well, yeah, best of luck. Best of luck, dude. I know you're going to do
Thank you.
great.
Thank you. I'm looking forward to it.
Wait, hold on. What did the leprechaun go to sit on the pet? Oh, Jesus.
Hey, I
Oh,
got my
dude,
Greyhound.
happy St. Patty's Day.
Oh shit! Yeah, I didn't even pay attention to that stuff. But yeah, since Dylan doesn't have too much time, since he has a exam, let's jump right into it. This is kind of
Yeah.
I know Dylan. He's a young fella jumping headfirst into investing. He's going straight into the multifamily space. Me and Matt probably. I know Matt has small multi stuff, but maybe more single family properties. So we're going to kind of debate a little bit single family versus multi-family investing. So maybe Dylan, you can go first as far as why you went straight into multifamily stuff.
So I can think of a few things, but I'm going to leave these for later. Why I think that single family could be better. But for me, in my case, I have partners. So I had to jump into a space where there's enough cash flow to like get people interested in wanting to invest in the deals. So if we're buying a house, like, I mean, I already talked to my partners before this, even looking at duplexes, they're like, yeah, I'm not about to split $200 a month with somebody and put the money down on that. So, if you find something bigger, we're more than interested to commit the capital, but we just, need to be able to like make not a substantial amount of money, but like enough money to where it makes sense to split with everybody. So that's why I jumped straight into multi. Getting my real estate license is part of that. We're wanting to scale a PM firm with it and then start just acquiring with more partners just besides the two guys I started with.
Wait, hold on. Sierra caught me off guard with this. I wouldn't expect
Roasted.
I wouldn't expect it. I wouldn't expect this from her. Well, maybe she's not even talking about me, but I wouldn't expect it from her. But she says celebrating St. Patty's Day by watching the best leprechaun-sized real estate investor on YouTube. So I guess thanks, Sierra. I was looking forward to seeing you in Asheville, but maybe I changed my mind now. But thanks for tuning in.
That was a good
uh,
one.
yes, it is. Hey Sam, it looks like
Hey,
you're coming
Sam.
from Dylan's channel. You know what? Actually, I forgot. Let me post Matt and Dylan's handles and channels also in the chat. But Matt, maybe you can fire back a little bit about the single family space and just quickly, what's your thoughts on that?
Yeah, I think, well, Dylan, he, assessed kind of where he was at, right? And he needed the partners. And so what asset class kind of fit that investment style? And I think that's like the biggest thing, right? Is like, it's not to say, hey, this one's better than that. Like, sure, there's pros and cons to every investing style. I think you have to be a little bit more self-aware and say, hey, what resources do I have now? Do I have the money? Do I have the time? Do I have the education? And of those three, you can kind of pinpoint, okay, let's see what kind of makes sense for my given situation. So for everybody that maybe is, married, has a kid versus being single, that is a huge distinction, whether you want to do a house hack, right? Where you want that personal space, you want to have, more space for your family versus if I'm, single, I want roommates, I'm minimizing my housing expense. Sure, I might be able to sacrifice some of that privacy for house hack, whether that's a single family renting out the rooms or multifamily renting out the various units. And so I think it's very situational dependent, and it's not so much, it's more about what's best for your investment profile, for your investment, awareness. And so, it's not one versus the other, but like, everybody's going to have their own opinions on different asset classes. So you just got to pick one and then go with it.
Cool. We got some people. It looks like they're tuning in from some of your guys' channels. Jack 200 says hello. Quantum wave pattern says, "What is this? Investing?" Yeah, we're today. We are debating single family space and
So Mark's bots.
multifamily. Yeah, it could be. But hey, Dividend Dave is tuning in. I sent him a link. He's actually in North Carolina, so I'm probably gonna meet up with him this weekend. Him and Big Val up in Winston-Salem area. So finally get to meet one of the OGs of the ORAT family in person. So Dave, hope to meet up.
You guys doing walking around properties, different investing classes, asset classes, or just doing a meetup out there?
No, I'm out since you haven't been around. You don't know what's going on, but I'm
Yeah.
waiting
All right,
waiting
man.
for an MRI on my shoulder, so I'm out of
Oh
work.
no, dang! What
So I'm
happened,
just
dude?
I got hurt on the job. But
Oh, that's right. That's right. Yep, they're listening. Okay.
but so I'm waiting for my MRI. So I'm just gonna since it's spring break, I'm gonna take my son up to see his grandparents in North Carolina, and then yeah, just so happens Lauren's gonna be in Asheville this week looking at a self-storage property. So me, Sierra, Lauren, Hunter is gonna come up from South Carolina. We're gonna meet up. And then I'm probably going to go check out a Charlotte basketball game on Thursday. So as I go up that way, I'm probably going to meet up with Big Val and Dividend Dave up that side. So,
Cool. Yeah, it's exciting.
Yeah, and then I'm sure just probably look at properties or goof around because at some point I probably want to end up buying stuff in North Carolina or even South Carolina, maybe even Tennessee or something. But that's kind of the plan. Hey, Frank's here. Thanks, Frank. Got Charles here. Oh, Big Andy's here. Lynn. But yeah, so Matt, what I mean, as far as for you, are you looking to go bigger, or you kind of like the space you're in right now?
I think we're content with the space that we're in, just given our current lifestyle. Still active duty military. We're not going to be able to set roots in a specific location, right? For the time being, right? So we have a timeline until 2027 here in New Orleans. Obviously, things can change and timelines can shift. But until one of us, either gets out or establishes roots, I think, putting a firm hold on like, hey, where do we want to really build that foundation for our portfolio kind of is really, really mobile at this point. So it just fits our lifestyle to be able to use the VA loan house hack, kind of where we've been moving both in Florida and New Orleans right now. So time will tell.
So for you, Dylan, I mean, like, is there ever any thought of going single family home, or you're kind of just full into the bigger multifamily space?
I don't think I'll buy a single family home until I'm buying my home and it has to be paid for with cash flow from the businesses. The reason for that is I look at the numbers between multifamily and single family, and you can talk about, ARVs and stuff like that from flipping properties, or rehabbing properties and increasing value. But from a pure cost perspective, I'm looking to buy things for like 60 to 70 a door. And I don't think I'm going to find that in a single family space, especially like nice houses. But what I've been able to find is some of these bigger multi-family buildings. So, the 5 units plus, the bigger you go, the more efficiency you can get price wise. So we've been able to pick up, we picked up a 12-plex last year for, I think it was about 62, 63 a door. And then we put about 50 into the building. And we increased the rents by about 30% because what we've noticed is a lot of the owners, while they don't do as much of the maintenance that they need to do on the buildings to maintain them, they're just mom and pop investors. So they're not like keeping up with the prices. Some of them have these properties paid off. So whether the rent is 600 or 950, it doesn't really matter to them. But to us, when we have to go get a loan, we definitely have to get the rents up. So yeah, I don't see myself going to the single family space just because of the value add on the commercial side. And if anybody doesn't know how the valuations of commercial is, it's all based on cap rates. So like if you're able to increase the property's income by 30%, you can take whatever amount you increase that income by, divide that by the trading cap rate in the area, and then you can see how much value added to the property. Like for example, on our 12-plex, I think we added somewhere around $300,000 or $400,000 in value just by increasing the just by increasing the income by 30% in some cases, up to 50 in others when we had turns, and then we just re-rented it at market.
How do you want to push back against that, Matt, as far as the single family space? I
Dude,
know a lot of people. Yeah,
I
go
got
ahead.
nothing. I got nothing wrong with that. I mean, I feel that's great, right? You're getting something at a discounted value, putting in a little sweat equity, and then pulling that and stripping that equity on the backside. So I mean, what do you like? I think right. You got to evaluate what your education is, what your partnership levels are, and I think it's hard to sit here and say, oh man, like single family is like the rocking and rolling, but like that might not always be the case, right? I think it fit the case for the life situation that we were in, and I think there's nothing wrong with getting a couple base hits here and there. I think that's the whole investing
sure.
journey. It is a process, right? So you get a couple base hits, and you're not always going to kind of hit that home run deal, right? But at least you're in the game. You're learning. You're figuring out. You're making mistakes. You're obviously failing over and over again, to prepare you for the future of what your next investment endeavor is. So, no, I think it's great. I think the other question I'd like to ask Dylan is like, in terms of the financing side of things, are you feeling a little bit of, 'cause I forget what year you bought it in, with that rise in interest rate, are you feeling any, bridge balloon debt kind of pressure having to refinance, or you want to talk about that?
Yeah. So we bought it last year in August, and we got a 5/1 adjustable rate mortgage when the rates were around like I think we got like 6.65, and our projection for like the next couple of years is that we already finished the rate tightening cycle. We're expecting to just continue the rate cutting cycle over the next few years. So I've spoken with my bank already. And they said that, when that time comes for a refinance, that they'll actually let us do a 20-year fixed rate mortgage instead of doing, an adjustable rate mortgage. Me and my partner both want to stay out of bridge debt or anything like that, where we have, floating rates that could, that's the way people get blown up in the business. In fact, I was just reading an article this morning where a company that is investing in my town, the bank that I actually got my loan from, they're foreclosing on them because they had construction loans and they've had them for the past few years. And I'm going to guess they went through that interest rate reevaluation period where, it went from a 3.5 up to a 7. And now they've got, $6 million on this loan that just refinanced, and the rates doubled. So payments doubled, and they just had to foreclose on them. And, I'm actually wanting to talk to the banker to figure out what they're going to do with those properties. It's not my forte. It's all retail space, but I do want to at least like see what's going on, see if I could point them to somebody else's direction that I might know that does buy retail space, and, maybe broker it or something.
For sure. Yeah, no, there's lots of opportunities, but I think the biggest thing, right, you said, is like fixed rate debt. You could say, pros and cons, multifamily, single family. I think one of the single family perks, right, is 30-year fixed rate debt, which if you got it sub inflation, that's the thing about real estate is there's so much abundance that everybody can participate. And, it doesn't need to be like, oh, hey, I got a 2.5, you got a 2.65. Like, look at me. Like, no, dude, nobody cares about that. Right. It's the principle of fixed rate debt, either level or sub inflation, preserving your wealth, right, for the 10, 20, 30 years. So that's awesome that they can offer that.
Yeah, I think another thing I can really throw your way in terms of like perks of single family, and I was telling Mark I was thinking about these yesterday, is your vacancy rates are going to be a lot lower. Like my partner owns quite a few single family houses as well, and he said he's had tenants that are not there for like a year or two. They've been there like since he owned the property, which is 5 and 6 years ago, which is amazing because turnover is really one of the other things that kill us in this business. So if you're able to like decrease your turnover from, 5 or 10% to almost 0, I mean, that's an amazing perk. Oh, and the 30-year fixed rate debt. I am envious of that. I can't touch that. The most I can really get is a 25, and I have to push for the 25.
Yeah. Still, that's solid.
I'm wondering if I should mess with this troll in the chat and see
Dude,
who's exciting him the most? But he's coming from
wow.
one of your guys' channels though.
dude,
Uh,
it's probably X, man, dude. I don't know what it is, but
oh,
like lately the bots have been crazy.
but the one thing I also want to say too, like Matt, I know, you're in the Coast Guard, you are looking to get your license, right? So it's kind of, you've found a path, right, to use your VA, and that's kind of something, why you're looking to get your license, also to leverage that. So, I think that's also why, like, the single family space, right, is beneficial, with the VA loan and everything, and that's kind of like the superpower for what you're working on too, right?
Yeah, I think you really you try to prepare yourself to cater right to your maybe targeted clientele, right? And I think who am I best to help was my previous self, 5 years ago, right? So, um, gosh, I'm just it's a process that I think lends to whatever your skill or expertise is given that season of life you're in. So it just kind of fits kind of where we're headed to and what we're working towards.
I guess the other question I want to have is like, could you see yourself jumping straight in to like what Dylan's doing, like straight into like bigger multifamily space? Like, because for me, I mean, I think, I never thought of investing. It was more just, you buy the condo, then you get into the single family home, and then you kind of maybe, what is it? You kind of fall into being a landlord, right? Like accidental landlord kind of thing. So I guess that's most people's path. But so like Dylan, what he's doing is just jumping straight into the multifamily space, and I find that pretty unique. I mean, could you see yourself doing that?
Yeah. I mean, yeah. Dylan's got that courage, man. I've already gone through an experience working with partners, losing money in short term rental, raising a fund, dealing with capital raises, and I actually do not want any of that stress and extra anxiety of being responsible for other people's money at this given time in my life. Right, that could change in 5 to 10 years, but I think I got enough on my plate, and that's just not something. The whole client investor relations aspect of it, I've kind of experienced a little bit on our side. The fund really went under. Rising interest rates lost about a whole self-directed IRA worth up to 30K, right? And I was in my mid 20s, and then it's an experience like that that's like, all right, let me settle down, let me kind of corral things in, and kind of pick and choose and be a little bit more guarded of where I invest my money. And so, um, an experience like that could shift anyone's perspective. So for me personally, it just didn't work for me in my lifestyle.
I can agree that that piece is definitely very concerning. So the partner that I have on this one, he's my partner in the marketing agency that we have as well. So it's not that deep. Like, we're both real estate investors right now, and we always try to buy with a margin of safety. So we knew that the deal was like going to be a good deal, or at least looked like a good deal to us. But we were also willing to, like, hey, you're not going to get paid this month because we have to put money into the property. And I just shoot him a text because I property manage it for us. He's totally cool with that whenever we have, anything like that going on. So when I look at raising money from other people that's outside of, like, him, our other partner in the marketing agency, or, someone close to us, I definitely feel like the urgency that we need to find something that's like, one, it needs to have a big margin of safety, but two, we really want to hit it out of the park on the first one, because if you kind of only have one name in the industry, so we're not going to buy a deal just to get a deal under contract, or just to say that we own more properties. And that's something we've been, I wouldn't say struggling with, but just like being ultra conservative with, just for this first deal, because this is the first one where we're raising money outside of us, just through people that we know, network wise, or connections. We're trying to stay local to Indy so we can at least take them to the property and they can put eyes on it and see what we're investing in and such. But yeah, no, I feel that for sure.
Yeah,
Okay.
all the pros, they don't come out with a few cons and every now and again. So
Yeah, so I'm also trying to do a better job of not sharing comments until after someone speaks, because a lot of times I would be sharing people's questions and stuff on the screen, but it makes it harder for me to edit the videos after because like the screen's moving around. So let's see. So Lars does say, if I recall correctly, there is 30-year fixed rate for multifamily from companies that do DSCR loans, but it is more expensive. So yes, I think Stephen Dow from Velocity does have a fixed rate DSCR type loan for multifamily, or I think what is it, 5 and above, 5 to 20, no, 5 to 40 maybe, something
Yeah,
like that. It's like,
more expensive is an understatement. I talked to them, and they're, the going rates right now are like in the sixes, and they're at 10. So I was like, yeah, we ain't making this work. I mean, I could see it if we were doing a huge value add project and we just wanted to, get the deal under contract and refinance in a while. But I was like, I'm not paying 10%. Especially when you're looking at properties that are worth, around $1 million, like in a single year, like it's a lot of interest.
Jen also says, good luck with your test today, Dylan.
Thank
And
you.
Jen, Matt's also studying for his. I don't know how far along you've gotten, Matt, because it's been what, about a month since I last talked to you, maybe. How's that going?
Yeah, give or take. I'm about a quarter of the way done. What is it? Mine expires at the end of July, so I have some time. Got a few work things that to take care of, but yeah, I'm working through it.
So one thing that I did for the exam, because I learned this from some of the other brokers, is like I was initially reading through the entire like class at like, because they just pretty much give you a textbook, and they were like, no, skip that. So just go straight to the quizzes and the review sections. So like cover the review, take the quiz, cover the review, take the quiz, and just get done with the 90-hour course, and then actually study for the test. But I mean, I don't know if that's a super recommended thing to do, but they were like, don't waste your time on that 90-hour course. Just get it done.
Yeah. No, it seems like that. Just going through the first, like I said, 25% of it right now. So
Come on, man. You got some Coast Guard computer yearly annual training that you just turn the computer on and let it scroll to the end, right?
dude,
And take the quiz.
bro, why you gotta put us all on blast, dude?
Oh, well, we have that
Those
in the
just listening, man.
well, we
He
have that in
said,
the fire department, but I mean,
oh gosh, GMT, was it general mandated training?
yeah,
Man,
yeah,
that's how you get your mouse to break. You click too fast.
yeah. Well, but now you can't do, because I think maybe when it first came out, you could like scroll to like almost the end and let it run like the last whatever 30.
You
But
gotta
now
they
now
have
you
a
got
cursor. It's
yeah,
like a 20-second clip. You run it to 19,
yeah,
boom,
no,
triggers it, and then you hit the next. I mean, I wouldn't do that, right? I
yeah,
just
Yeah.
know about it.
yeah. Now
Set
There's a
up an
difference.
automation on your Mac, maybe,
There's a difference, guys.
yeah. Now they caught on though. You can't do that anymore. Let's see. All right, man. I don't know what channel you came from, but thanks for tuning in, man.
Yeah, I don't know. I
Oh,
stopped my
oh, it
pairing.
must
I
be
don't know.
Dylan's channel. See, it must be Dylan's channel. They're coming in from some of these bots,
I
but
don't
It's
know.
all right.
that's all right,
Love
man.
them.
It's fun.
Yeah,
Yeah,
love the haters.
any type of interaction is good. Um,
It's comments. So
yeah, no. The one thing though I always kind of go back and forth about with the single family and multifamily space is, people try to sell multifamily as far as um less vacancy, or if you have a tenant move out, you still have others paying rent. But I guess, I mean, I kind of look at it like, if you have 10 single family homes, right,
mhm.
and a tenant moves out, you still have 9 other people paying, in a sense, right? Compared to like somebody has a multifamily and they're like, oh, if you have a tenant move out, you have all these other units still paying, right? But I look at it as like, if you have 10 single family homes in your portfolio and you have a vacancy, I mean, you still possibly have, whatever, 9 tenants paying or whatnot, right? So I don't know. I don't really like how some people try to push that on as one of the
Mhm.
selling points for multifamily. I don't know. What's your guys' thoughts on that?
So I would personally say that I do agree with you on this one because, well, up to a certain point, because with single family homes, when you have one or two or maybe three homes, like yeah, it really sucks if somebody's not paying their rent. But if you have 10 or 20, it starts to become a bigger portfolio, and you can like balance that risk out. But also uh, the vacancy thing, you don't have as much vacancy in single family, in my opinion, because people just don't move as often. And also, we have other expenses that you don't have as a single family investor. Like, I doubt you are paying for somebody to come do landscaping and mow the lawn and stuff like that. Like, I have to pay for all of that for our multifamily properties, and we have to factor that into the numbers, which I know some people don't, and that's why we'll get outbid on stuff. But like, we just have, I feel like we have more expenses overall, just because there's no one person that has to maintain the property. Whereas if you have a tenant, like you could expect them to replace the furnace filters and mow the lawn and stuff like that. And the only expense you might have is, your property taxes and insurance and, maintenance and stuff. But yeah, no, I think there's definitely a benefit. I mean, that's why my partner has, a pretty decent sized single family portfolio as well, just because he loves that they take care of everything and there's almost no turnover.
And Jason does make a good point too, but one roof versus 10 roofs, right? So that's another way to look at the single family versus multifamily space. Like yesterday's live, I did have Kevin, firefighter in the Bay Area. He's on X quite a bit, but he's into self storage now. But same thing, right? He initially started single family homes. Kind of that's just how the easiest way to probably get in. You get your feet wet and you start building a decent sized portfolio. But then after that, you start looking at maybe other possibilities out there. And so he still has a small single family portfolio, but now he's kind of gone full into self storage, and that's kind of his niche now. And I think for most people, that's kind of the path, right? They start in a single family space, and then as they start getting a little more experience, then they start looking into other avenues. But I think that's just for me. Like I said, amazing Dylan, just at such a young age, is just jumping straight into the bigger multifamily space. So did you have like a mentor that's why that kind of pushed you down that path, or?
I had somebody ask me that they text me after the last live, and I was like, yeah, no, not really. I mean, I just watched, Bigger Pockets. And then I think the thing that really got me into the commercial multifamily space was seeing that podcast with Cody and Christian from Multifamily Strategy. I've never paid for any of their stuff because I'm not really a huge course guy. Like, I feel like anything I really need to learn is online. And the only reason I would pay for a course or an event is to like meet the people that are also going to be at said event, or like connect with the creator of the course or something like that. So like, I'm probably going to take Lumberjack Landlord's course at some point in time, just because I'm building the PM company. And I feel like that would actually be really helpful for optimizing, especially since he runs like 150 unit portfolio. But yeah, I kind of lost where I was going with that one.
Oh, well, you have a test in the back of your mind too, right? So you're
I am
trying to
thinking
think
about
of
that.
other things.
He's got to save that brain power, man.
Lars does say one of the things with multifamily compared to single family is the rent to property tax ratio. So although property taxes are higher in multifamily, the rent required from each unit is smaller. Yeah. So yeah, I mean, there's pros and cons in each, right? You just got to be comfortable with what you're doing. And I think even yesterday, that's what Curtis brought up when he was talking with Kevin about self-storage. It's kind of get good at what you're doing first. And then, if there's something that interests you down the road, then yeah, you can dabble in it. So even like Dylan, like maybe you're going straight into the bigger multifamily space, but that's your avenue right now, right? And I'm sure you're not going to be dabbling in like you said, you're not going to dabble in the single family space. You're focusing and doubling down on the bigger multi stuff, and then maybe down the road, if you have some interest in some sort of single family plan, that might interest you. But I don't see it too often where people go the other way, right? They go from multifamily back towards single family. So you might just start heading in the different direction.
But that's good that I think seeing and recognizing kind of like obviously the scalability of multifamily to just when you kind of break into your real estate investing journey, I think is a lot of people probably don't even recognize that, and they stay fixed in one method, right? So I think able to like evaluate, hey, pros and cons of one versus the other, and then you're able to like Jen saying, kind of pivot once you kind of got that that foundation established, and you could probably manage a little bit more or higher risk asset class on the next endeavor. So yeah, lots of good stuff.
Yeah, no, I feel like that's definitely where I'm staying right now, because I've looked at the the retail spaces and stuff, and I'm like, no, or even self storage, because I see the cash on cash that some people get for that, and I'm like, I'm just gonna stay in my lane, just keep doing the multifamily, and another thing, which is why I chose the bigger multifamily, is on top of trying to build the fund and the PM and everything like that. At some point, like we're not in any rush to do that, but I'm also trying to make a transition this year from doing marketing full time to switching to being a broker to like help people find investment properties, but then also do the property management on top of that. So I had to find properties that add cash flow a little faster, because I'm trying to condense, they always talk about this 10-year cycle of like, invest for 10 years and then afterwards you can retire after that, be financially free. I'm trying to condense that from 10 years down to like 2.5. So it takes just bigger properties to make that work faster, because if I pick up a 20 unit property and I underwrite it to like have my management fees in there too, that means I get to pick up like 20 more one more management contract for 20 units. And if we do that a couple times, I mean, that's really as big as I want it to be, is around 100 doors. I'm just looking at it as a means to an end to focus on investing.
Absolutely. So Jen says master one strategy and then pivot to master another. And yeah, Jen folks actually had a ORAT or California meetup yesterday. So I saw some photos. They had a good turnout. I had to Photoshop myself in some of the pictures. But yeah, they had a nice turnout. So it looked like a lot of fun. The community is doing a lot of things. I think people are trying to do a lot more meetups on their own. Another thing about the single family, multifamily too, I think, it also depends maybe what market you're in. So, especially like in Hawaii, I could never see myself jumping in straight into a big multifamily out here. I mean, the price point, right? So, and then if you're thinking about doing it remotely, that's another thing too, because I feel like even just jumping into the single family space, out of state investing, you already have enough obstacles and challenges to overcome. And then if you're going to go into the multi space, you're talking about different pathways. So I think that has a big factor to play into. So I think that's just why most people probably start in single family, right? It's kind of just that path of, starting, maybe it's their personal residence at first, right? And they kind of go from there. Yeah. So Jason says, I love that, Dylan. 2.5 years, a hell of a goal. Yep.
It's crazy.
Crazy's good. Crazy's good, man. Because you'll be a lot closer than you were if you made that like a 10-year goal, right?
Yeah. No, I will say with the multifamily compared to the single family, though, you definitely multiply your problems if you don't do your numbers right. So like on the 12, I was like, if I'm off on our our reno numbers, like if I'm off on a house, $5,000 or $10,000, big deal. It sucks, but it's whatever. If I'm off $5,000 per unit on 12 or 20 units, that's a really big problem that I look at trying. Like I have other people check my numbers, because one of my friends does acquisitions here in town for another CRE company. And I'm just like, hey, check this out, because I'm not trying to make a mistake like this, because those are very expensive.
So Dylan, for your license, are you going commercial? Your license going to be for more commercial deals, or you're going to be a traditional single family home sales, also realtor?
So it's the same license, and I have friends in commercial real estate, and I have friends that actually work at a commercial brokerage. I think I'm going to stick with the residential side, the residential multifamily, and if I pick up a commercial deal to sell for somebody, I mean, by all means. But the deals that you close per year for a commercial broker is like, for example, his entire office closed 19 deals last year. And that's, like you might get 2 or 3. Now, granted, if you close those, the commissions are massive. But I was looking at more of like, I'm trying to make this the year where I do all of that. So I just need volume, really. like closing more contracts. And then I'm going to be calling commercial people that own commercial properties to either see if they want somebody to manage it for them or see if they want to sell it, either way.
And then for you, Matt, your license, what is your kind of vision for that?
Yeah, it'll just be strictly a residential referral license. I'm getting it in Florida. Most of my, I guess, tax or state of residence documents still reside in Florida, even though we're here in New Orleans right now. But I think as a referral agent, it's just a lot more scalable throughout, all 50 states, as opposed to just being in your local backyard. And what that referral agent thing that I see is like, I'm not really showing houses. Most likely I will just kind of be like a sort of a connector between people. Like, hey, they're trying to, get an owner occupied property. We walk them through, hey, this is what we've done. We've done either single family rent by the bedroom. We've done small multifamily, medium term rental, short term rental, kind of help them understand how to run the numbers, how to analyze the deal, and kind of package that up, refer them to an agent that, either we vet or know through a network that's either familiar with the VA loan or owner occupied loans. And so they can kind of get their foot in the door of capturing, right, the quote unquote American dream. If they're looking to incorporate real estate as part of their building that kind of generational wealth. So yeah, that's the idea. Just got to put it into play.
You're gonna join me and Charlie at EXP. Oh, did he tell you I met him, or I had a call with him and Kobe?
Yeah. You met Charlie? Oh, cool. Yeah. He's good people.
Yeah. I didn't say nice things about you, but I said I know
Good,
Matt.
Good. No, keep it straight edge, dude.
I said, yeah, Matt's coming to EXP with us. But
I'm looking at EXP and the Real Brokerage right now are the two I'm deciding between.
Yep. Real Brokerage is newer. I mean, they're probably the copy of EXP. EXP is kind of the original. And I started with Remax, but Remax that was more because so you'll start finding out if anyone wants to get their license, you'll start realizing like certain brokerages might only do residential sales. Some might only might have a separate property management division where you can't do sales. You have your license, but you got to do property management. So at the time, Remax was one of the only brokerages out here that allowed you to do both, where you could do sales and property management. So that's the only thing with EXP though. Currently, they do not have a property management division. So it's something in the works, but that is the thing that they are trying to work on. But a lot of brokerages don't want to go into property management because there's so much, I guess, liability on that side. So a lot of brokerages, that's kind of why if they do property management, they want the agents specifically to focus on that because there's a lot more legality to it. But yeah, EXP is a great place, man. I mean, it's everyone you talk about like Uber and Netflix and all these cloud-based type of things, right? That's kind of what EXP is, right? It's taking that brick and mortar space out of it, so that's why the overhead is a lot lower. So that's why your fees are always lower. And even for a brokerage, I'm not really sure why someone would want to open their own brokerage anymore. There's just so much startup costs where you could go to EXP, build a team, and you don't have a lot of that liability on your plate, and then you get all that revenue share. So yeah, it's a great place to be. A lot of opportunities, like Matt's looking at the referral possibility of it and things like that, where it's not even about possibly even selling homes, right? It's just who you're connecting with and leveraging off of that to build a different stream of income. Let's see. Lars says, as someone who W-2 job is managing commercial real estate loans from a bank to customers, I already know Dylan smarter than 95% of brokers. How many?
I appreciate that.
Yep. Yeah. Lars is doing. So if anyone doesn't know too, Lars went to the ORAD event. He has pivoted to the Pittsburgh market to invest in. I know he put it in an offer recently on a quad. I believe he didn't get the deal, but he's still looking. So haven't heard it.
Another one, baby.
Yeah, there was one that he really liked. It was in the kind of a neighborhood he wanted, nicer neighborhood. It met all his numbers. So unfortunately, it sounds like he got outbid. but I'm not sure. Hey, Multifamily Woody's here. Haven't seen you in a while on X, man. How's everything
Oh,
going?
perfect. Right
Thanks
on.
for tuning in. Yeah. Hope everything's well, man. Send me a message on X, man. But yeah, let's see what else you guys. Anything else on the single family, multifamily space you guys want to debate on? I know Matt. I think did you mention it? Yeah, you said you had a unique take on it or a different something you could say on it, right? Was there something you
Well,
messaged me about that?
I think I would say, I can kind of see both sides, right? Because I have couple single family homes, and then small multifamily triplex, right? And so you could kind of see the pros and cons, right? It's higher upside on cash flow on the multifamily, especially if you can convert one of the units to Airbnb, right? So that's what we've done. But again, it is very, uh, you know, location dependent, right? Are there rules and regulations that, um, can do they inhibit short-term rentals, or are they good for kind of promoting, hey, tourism is coming big to this area? So it's very location dependent, which they definitely kind of already hit on. I think if I were to do it again, right, I wouldn't change a thing. It just happened to fit the lifestyle and trajectory that I'm going on. So not to say either one is better than the other. I think they're both right, given the different season of investing that you're in.
Hold on. Let's see. So, Multifamily Woody, I'm not sure if you're still here. You're tuning in from X. But he said, Dylan, I'm from Indiana as well. So,
Oh, you need
um,
to shoot me a DM on Instagram.
yeah.
Just my full
So,
name.
if you are on X, or message me on X and I can get you Dylan's contact. But, Multifamily Woody, if you are still there, where in Indiana are you? I guess maybe you can put or be more specific.
Yeah, if it's like Evansville, I mean, I can hop on a phone call, but that's like a 3 or 4 hour drive.
And then Shane is tuning in from one of your guys' channels and says, Dylan, I messaged you and saw this live. Shouldn't you be testing or did you already smash
Dude.
it? He's saying.
I got the test in like an hour. Oh, okay. So you're super close to me, Multifamily Woody. Yeah, yeah. Send Mark a message and then we can get connected, because I'm always looking for multifamily in that space, and I'm glad to connect with investors in the area. I actually have an investor group that I put together here in Indy, just of me
Nice.
and my friends, because I got tired of going to the local RIAs, because it's like 90% people that don't have a deal or like don't have any properties, and like 10%, it might even be 5% actual investors. And I was like, let's just make one that's 100% investors. So I'm bringing like CRE guys, multifamily people. I eventually want to try to get somebody from every part of the space, but right now a lot of us are residential, multifamily, and single family too.
So Multifamily Woody, Indianapolis. Yeah, message me on X. I am trying to get more people on X. They don't seem to believe me that X is a great place for real estate. So Dylan, I highly recommend you get on X. There is
I'm
definitely
already a premium user.
oh shit.
Yeah,
Well, find me on X. Am I following you on X? I forget. But
I don't think so.
yeah,
We're gonna have to connect.
message me. Uh, but let's see. Lynn says, what was your biggest real estate mistake and biggest win with your portfolio? Who wants to, Matt? You want to go first?
Yeah, I can talk about the biggest mistake. It was, trusting your money in a fund, right? So I kind of already talked about the self-directed IRA and a short-term rental arbitrage fund. Didn't pan out that well. I think, it really matters who's the operators. At the end of the day, if that property doesn't operate, if it doesn't perform as your spreadsheet, the spreadsheet can look fine and dandy until the rubber meets the road, and you actually got to operate. You got to check up on your property. You got to make sure the rehab is done how you want it. And so operations, I would say, is the biggest thing. So I learned that you got to be careful who you trust, and I'm glad I learned that lesson here in my mid-20s. It was I think about 3 years ago. And so, yeah, that one stung. And I think moving forward, it's a little bit more maybe hesitant of, hey, who do I partner with? So, I know this is very contrast to kind of what Dylan's perspective is. But like partnering for me on a deal right now is just not in the cards. I think, sometimes you have an event like that and you just kind of rein it in, collect yourself and kind of push forward, whatever that may be. And so right now, that's just kind of focusing on our portfolio, living below our means and putting everything, like living on one income and investing the second income, right? So I would say that's probably our biggest real estate mistake. And biggest win I'd say is continuing the short-term rental that probably grosses between 50 and 60K per year, which was pretty profound considering you're like, oh my gosh, I'm getting paid as much on a booking per weekend than I am in my W-2. It's like, whoa. So little things like that can happen that really shift your perspective and say, hey, what is possible? So nothing great comes after a downturn like that. So
all right, Dylan, you can answer
I'd say
that.
from my perspective, mine was underestimating the costs of everything involved in like rehabbing a unit, because when I bought my first triplex, that was just me by myself. I had underwritten it to do like, I think I was estimating spending like, it was something silly like $7,000 or $8,000 a door to rehab a whole like 800, 900 square foot unit. It did not turn out to be that case because, in fact, that was just the floor and the appliances. So then I had another $7,000 on top of that. I ended up having to replace the subfloors. I had to, paint still. I had to add a railing because they didn't have a railing on their stairs, and that's pretty sure that's a code violation. But underestimating the AR, like the costs that I would spend on everything. So like I had originally budgeted like 22 or 23,000 for the whole building, and it's 3 units, and I've only rehabbed 2 of them so far, and I'm pretty sure I'm at 25. So I'm expecting to be somewhere around 30 to 40 because I'm going to have other people do the work for me on the next one. Just completely blowing out a budget. But I mean, it is what it is. The deal still works. But know your numbers, and the small things add up, because like I didn't even really think of the cost of like getting a bunch of paint pans, getting a bunch of rollers, like all of that stuff. I was just like, oh, I got the paint, I got the flooring, and I got, this, good to go. No. And then when I had to hire certain things out, that costs a lot too. Just not knowing your numbers, like it's fine if you're off a little bit, but you don't want to be off by like over 50% on your expected expenses. And then I'd say from a biggest win perspective, which also I could kind of say was a decent loss too, is on the 12plex that we bought. I am a 20% partner in that, because I was hesitant to go raise money from somebody else and buy 50% of the deal. So while we added it was like $300,000 to $400,000 in value to the property, just based on the cap rates that they trade for in the area, I only got somewhere around 100 of that. Where if I went and raised the money, I would have made about $200,000 in like 6 months on that deal. So, with it being my first one, I'm just kind of taking it as a learning lesson. But I mean, you could technically say I lost $100,000 by not asking somebody to borrow some money, because I only needed like another 50 or 60 grand to like own half of the deal.
All right, next question is for Matt. Let's see. From Stan, how do you feel about the balance between maintaining property rights versus regulating short-term rentals by government?
I mean, I think it's just the old classic bureaucracy of government overreach, more regulations. I don't even know if the city of New Orleans really has, a solid answer. I don't know. I think they're still probably going through a decision with, certain lawsuits. So that's probably still pending. And, I think like at the end, who does this really impact? It impacts those that come to the city of New Orleans to stay for tourism. And it also impacts by them not being able to regulate and enforcing their own policies, right? Like I know the big thing is like out of state investors. It's like, we live in this unit, we live here, right? Like, we're providing a space for people to come enjoy the city. This city has like so much to offer, so many festivals, so much food, et cetera. And so, I think by them, not enforcing the rules for like people out of state or for whatever that reason is, it ends up hurting again the people, the constituents that live in these local rules or local towns that they're supposed to be governing. So yeah, I think it's an absolute mess right now, and I don't know if there's any sort of light at the end of the tunnel towards any sort of resolution, at least in the near term. So that's how I feel about it.
Okay. Hyder says, yeah, my opinion, free market should always be paramount, regulated by natural incentives versus central opinion. And I know Dylan probably has about 10, 15 more minutes, so I want to get to Flavio's question for him quickly. What do you think about Hammond, Indiana?
So I don't know the area. I was actually looking this up on the map while Matt was answering his question because I was trying to figure out where this is. I see it's up near Gary. That's just a little too far away from me. Like with everything I'm buying with my partners, I'm just located right around, like I call it like almost like a donut around the Indianapolis area, but I don't buy in Marion County because it's a blue county. I buy around. So the reason I do that is because they're more landlord friendly in the surrounding counties than in Marion County. And then as far as Hammond's population, I see that it's going down over time, but I don't know enough about the city to really cast any sort of judgment, because you might see some growth coming down from Chicago because, remote work's a popular thing and you're super close. I mean, this looks like a 30-minute drive from Hammond to Chicago. So, if you're looking at the area from an out-of-state investor perspective, I'd probably just call people that live in the area. And maybe if you're really interested in buying something, like actually go to the area yourself and see if that's something that you want to be investing in. Personally, just off of a rough look, I don't buy in any market that doesn't have a growing population, just because I want that constant pressure on housing prices and rent increases over time of people continuing to move in. Like the county I live in and the surrounding counties around Indianapolis are some of the fastest growing counties in the entire state. And that's just why I've stuck to these ones, just because I know rent's going to continually go up because, with the restrictions from the cities and the counties based on like building codes and like what they're allowing people to build, there's always going to be a constant pressure on, the price of rent and everything, really.
Go
ahead. No, go ahead.
Do you, I think Indiana was one of the, I think it was one of the states that, so Honda, they originally were going to build a manufacturing plant in Mexico, and they chose Indiana. I'm going to do a little quick search. Do you know off the top of your head where that would be in Indiana? Because you talk about jobs, population growth, like you see this trend,
So another thing, if you guys are looking in Indiana, is up around Lafayette and Kokomo. There's a Samsung factory going in around Kokomo, and I want to say it's like SK. I think that's a car company. They're going in around Lafayette. I could be wrong. They're both Korean companies. I just heard that from my father-in-law that they're building stuff there because he rents cars to people that come from Korea. So, he gets all the inside details of like what's going on in terms of like how they're building. Like they just stopped building because, there's with some of the regulations and tariffs and stuff going on, it's increasing the prices of everything.
Sure. Yeah.
So Flavio, I know Flavio is more in the Washington area though, because he knows Ray. So I know Ray's trying to get him in the Tacoma Phi and all that type of stuff. But Flavio's been tuning in quite a bit. He says he's been enjoying the content. But I'm not sure. Are you looking to invest out of state, Flavio, or is there some sort of connection to Hammond that you're looking at? And then Hyder, who actually is partnered with Millennial Mike in a property in Gary. So he goes out to Gary quite a bit to work on the property. But he says Hammond and Gary are night and day for being shoulder to shoulder, visually, I mean. And then Harrison, who's tuning in, hopefully he's having fun with baby duties. But he says, Dylan, could you see yourself building small neighborhoods, or is there enough supply for you to buy?
I could see myself building a small multifamily and some of the bigger multifamily. As far as houses, I'm just not. I know the margins there, especially if I can get become a GC. Like I know that you can make quite a bit of money doing that. It's just not something I've really looked into. I think if I were to build something, something that I've thought about a lot is the, especially if I GC everything, building owner occupied duplexes and then selling those to, young professionals or whoever really wants to, owner occupy a duplex and eliminate their mortgage cost. I saw a podcast on BP on that a while ago, and I was like, oh man, that is genius right there, because he's selling to people that, like, the selling point is, half your house, like most of your housing costs, is already going to be covered by this other person. So I could see myself doing that.
Jason says I couldn't find where the facility or manufacturing facility is going to be for Honda, I think, what you're talking about, Matt. But yeah, Matt, where you been, man? Because I gave you a shout out on X right after you did your last kind of question, recap with Zuber, right? You guys had like this new series going on, and all of a sudden you didn't do any after that. So what the hell happened, man?
Yeah, he had the ORAD event, right? I don't want to detract from that, but I'll have to pick up with him when he gets back from his cruise. But yeah, no, that was a fun little series. There has been a little bit of a redirection in focus for my work, right? So I got to make sure the money making thing that pays the bills gets its attention, and so.
Yeah, you gotta do your 5 email, or you gotta fill out your
what
5 things you did last week.
I had to create some stuff to do 5 bullets, man. It's crazy, dude. Man, Doge is out here breathing out my neck. Can't just play the Joe Coasty game anymore. I gotta actually do something. So
let's see. Lars said building and owning a triplex and quadplex in a better suburb of large city would print money over the long term.
I would think so too. Yeah, especially the quads are what I always look for, but the quads I find are like, it was built in 1880. Somebody didn't properly gut it and everything. Yeah. So they just kind of they just drywalled over the plaster walls, and then all the walls are wavy and the floor is wavy. So I feel like I get motion sickness walking through there. I'm like, nah, I'm not buying this thing, dude. I'd rather just new build. Like, we wouldn't have any issues with that. I'm waiting for rates, honestly. Like, rates and prices have been a little crazy for building. If I could build in cash, that would be optimal. And usually with some of the bigger projects, I would say you should build in cash, like the multifamily, 10 unit building, for example. Like, that's what I've always heard from developers that have been doing it for a while, is just build in cash and then you can refinance out your money. But you don't want to subject yourself to the floating rates and everything like that. That could, cause a lot of issues. Where you're building a house, you lock in the price, you lock in the loan rate and everything like that. That's all groovy. But, with multifamily,
could be both. Right.
Yeah. But with multifamily, they can just move the rates on you, if it's a construction loan. So not ideal.
So Lindsay, who also invests in Gary, says Hammond is a great city. Property taxes are higher, though. Check into 2% of assessed house price for rentals and referendum. Added between $200 to $500 to your yearly taxes. Yeah. So yeah, Lindsay's doing a lot of cool stuff. So go support.
Speaking of freaking property taxes, I heard Florida. This would be great. They try to remove property taxes, but I haven't seen any movement in motion on it. It's just kind of a headline. So we'll see if that actually turns into fruition. But I think that'd be even great, because rents would come down, right?
Yeah. I mean, I think it's something coming up all over the place, especially whether you like Doge or not. I think people are starting to realize how much whatever fraud, waste, and abuse there is. So even Hawaii, a lot of people are questioning where all this tax collected money is going, property taxes and whatnot. So there's more people that are trying to figure out hey, where's all this money that's being collected going? And a lot of people are questioning why property taxes, or even should we be having property taxes for senior citizens or older people and whatnot, right? So there's a lot of things on the table right now, right? So even income taxes is hopefully being eliminated or reduced or in some way. So yeah, a lot interesting times. But I think the biggest thing is you got to be investing, right? You got to be buying assets, and just allowing to stay ahead of the market. Let's see. Yeah. Good question here for
It's
you.
a great question. It's a great question. Yes, we'll go. We'll go. Don't you worry. Third time's a charm, baby.
Well, don't believe him, Harrison, because he said that last time also that he would be there. So I would take it with a grain of salt. So if he's there, then I'll believe it. So
That's
we'll
it.
see.
Yeah. I'm not gonna build it or hype anything up. You'll just see me there, and that's cool. Dude, I did want to say you brought up a good point. I listened to this on the All In podcast. It kind of addressed what you're talking about. Is when the economy is doing well. During the last administration, right? S&P was really booming, right? Roaring higher. People get that wealth effect, right? They see that their housing prices are going up, the stock market's going up. They're like, oh yeah, a couple wastes, 26 million here, 26 million there. I'm not worried about it. Now you start feeling the reeling, it's like reeling back, and then they're like, oh yeah, like stocks correction, 10% territory. Prices of eggs, yeah, maybe they're going down, but they're still high in my area. What's going on? Then you start getting people to ask questions, and now they're really starting to think like, maybe Doge is actually onto something, right? Like maybe this is a bipartisan issue where Americans can agree that they don't want their taxes being wasted or spent, not efficiently for the betterment of the citizens in the country. So crazy times that we are in. But I thought that was a very interesting point that they made, and I kind of could not agree more in how they phrased that wording. So Mark, you kind of nodded your head. I'm not sure if you also listened to the most recent episode with Anthony Schultz.
Yeah. They're one of my regular podcasts I follow. I think I do miss David Sachs being a regular on there, but he is during
Crypto
the
czar, huh?
Crypto czar, right? So, but I do like that they're rotating different guests in, right? And I think Andrew Schultz brings that kind of more, not that tech world mindset or viewpoint, right? So a little more kind of the average
Connect to
person,
the everyday person.
Yeah,
exactly.
So kind of that basic, what his view, and like you say, right, people are just feeling it out there, right? And when things are good, you kind of overlook a lot of things, and things are okay, whatever, money here, money there, whatever. But now that things are tight, the economy's struggling, people losing jobs, whatnot, and now you're like really questioning, like, wait, you folks have been collecting all these taxes all these years, you've been collecting all this money all this year, and so where is it? Like where has it gone?
In the street?
Exactly. So
Yeah.
Yeah, so I think it's just waking people up, but I also think that is the eye-opening part to where, I hate to go, I don't want to go Democrat, Republic, but I mean Republicans, but it's kind of, that's what's surprising to where the Democrats are, a lot of them are pushing back against it, when it's kind of like you're saying, right? Most people want to see this waste or, fraud of spending or whatnot, and they're trying to push back against it when it's such an easy point to really jump across. You may not like how it's being done, but you can still agree with it's a good focus, and we need to address this, right? But they're definitely going the other way and trying to make like it's wrong and all this, and I think that's really pushing more people to the middle or right. I don't know, that's my take on it. But Flavio says here in Grandview for multifamily, it's like 120 per door. But yeah, I would love to enjoy the ORAC community. Yeah, man. So Ray,
use Mark's referral code on school, dude. Appreciate that.
Oh, anyways, but you join if you want to join, Flavio. But Ray, I know you know Ray, and that's your connection. But Ray definitely, he had a lot of hesitation about kind of going to the event, even putting himself out there. But I think after going to the event, and as he said, I bullied him into going. But after going to the event, he definitely saw the community of one rental at a time and how it's kind of different than other communities out there. And I think, I think the more, even the Tacoma 5, I haven't been there, but it sounds like the Tacoma 5 is a great place to be, especially with Dion and Curtis and Ray there. But I think, yeah, if you're thinking about jumping in the one rental at a time or even the school or Facebook side, yeah, definitely look into it. You know, the school side is great too, because you don't have to commit to like a yearly subscription. You can try it out for a month, you know, see if you get any benefits, see if you like it, see if you build any connections there. And if not, you can always cancel your subscription, right? But, you know, give it a shot for, you know, whatever, $20 a month or whatever it is.
With
Dude.
the other, oh, sorry.
I was about to say, Dylan, I feel like, dude, we got to make sure you're ready for your test. Is it coming up?
I got to dip soon. I was just going to say for Flavio's message, you mentioned the 120 a door. So like when I'm looking at the price, when I'm paying, you know, 60, 70, sometimes 80 a door, it's based on my rents. So like the rents I can get in my area are like $1,000 or like $1,100 a month or $950 a month in some cases. So that's really what it's based on. So if you're paying 120 a door, but you're getting, you know, 1,600, $2,000 a month, I mean, or whatever it is in your area, like it's all a ratio. So don't look at like the fact that I'm paying 60 to 80 a door and then compare that to your 120 a door, because this is just a completely different market. Like our rents are way lower than yours.
And Stan is saying, hopefully I'll be at that event sooner or later. So Stan, you're going to have to be able to step away from your Airbnbs though, right? So that's kind of why, you know, we're getting, you want to get systems in place, and I'm pretty sure you can. You know, I think you've been doing it for a while, and I think it'll be a good test for your systems, right? So you go to Vegas, you go to the one rental at a time event. I know it's a big week for you folks in your market, but yeah, I think it'll be a good test for your systems and how somewhat automated it could be. But yeah, Dylan, if you have to bounce, just bounce. Thanks for doing this. Good luck on your test.
Thank you for inviting me.
Yeah, man.
Yeah. So
Good luck,
hopefully
dude.
next
Good
time
to meet
you're
you, dude.
on, you're licensed.
Nice to meet you. Yeah, heck yeah, man. I'll see you guys later.
All right, man.
All right, man. Peace.
All right. So
Right.
yeah, so we got Matt here who's been dodging me for how many weeks? You know, him and
Dodging
Joe
is
don't want to
such
do
that's
this
a
anymore.
That's a strong word, dude. Sometimes everybody, you know, take a little pause. Take a little pause. Take a little reflection, dude. It's good for your mind, good for the soul.
Well, glad you did this. I mean, it's probably going to be a few weeks before I do another live, because I'm going to be in North Carolina. So if anyone is in the North Carolina area, I'll probably be there for a few weeks if you want to meet up. Yeah, I'm going to probably try and goof around with some lives. Might just be by myself.
Do some live. You can do like a live walk, dude. I'll check out some properties.
Yeah,
you know?
we'll see.
Something like that.
But we'll maybe when I meet up with Laura. Oh yeah, Hyder doesn't know. I think Hyder, I'm going to meet up with Lauren on Wednesday. She's actually going to be in Asheville looking at a self-storage facility.
Dude, Hyder's gonna have to make a trip.
Yeah, Hyder, if you want to come down
to
North Carolina, come to North Carolina, man. Politicians set the tone for opposition and controversy. Yep, yeah, definitely.
For
But
sure.
but that's the thing, though, right? I feel like that finding waste is such. How can you have opposition on that, right? I think that's
the waste is going in your pocket, dude. That's how.
Well, yeah, right. But that's why it makes it so obvious in a sense, right? So I can see you having opposition and controversy on many other things, but there's just some things where, and that's kind of why I feel like their party is struggling so much, right? And it's pretty.
The Republican Party is more of the old Democratic Party right now. That's that was kind of the phrasing that I heard. And I was like, all right, I mean, you know, it's just a different name, but the principles are sound, right? So
yeah. So talking about All In podcast, right? That's what what's the main guy's name again? Shoots.
Not Freeberg, but Jason.
Yeah, Calcane. No, not Calcane. Jason. I forget, but the main. Yeah, but right, he was saying it's so weird. We're like in a bizarre world where Trump is almost the voice of the Democrat, what the Democrats used to be, right?
Yeah,
the working class and all, and so it's like he said, we're in some kind of bizarre world right now where
we're about to switch, dude.
Yeah, right. We're now like Democrats as a class of the elites and whatnot. But Jim says, "Go cause trouble on the East Coast." Man, I don't cause trouble wherever I go, but I am gonna meet up with Big Val and Dividend Dave probably this weekend, probably towards Winston-Salem. I don't want to go to Raleigh because I don't want to go near March Madness stuff.
Dude,
That
that'd be crazy though.
yeah, yeah. Um, yes, Hyder. I will tell Lauren that she broke your heart by not, but she will try to be there next year. It's just unfortunate she was going through a transaction at that time, and she would have been like flying back and forth for signings and closing.
Yeah,
But she
that
did
would've been a
finally,
lot.
yeah. So that's why she did finally close on her equestrian property, and now she's looks like she's going full speed into self storage. So she's going to be looking at a self storage facility in the Asheville, North Carolina area. So she'll just so happens she's going to be there while I'm up there. So we'll probably meet up. And I think Sierra's going to be heading back from Connecticut during that time also. So Sierra's going to try and meet up. And I think Hunter is going to drive up from Greenville, South Carolina to hang out with us.
Dude,
So it's going to be
that
fun.
looks fun, man. Can't wait to see the photos and what you guys do.
Yeah, man. Well, if you came to Vegas, you would have had photos also.
I would have known. It'll be good. It'll be good. The next one.
Well, you'll be licensed next time you're in
Yeah,
Vegas.
yeah.
When you're in Vegas,
More authority.
yeah, you'll be licensed. Yeah, and hopefully we can get maybe Charlie or someone out there. I know Aaron will probably be out there again. But yeah, anything else what you working on? Anything people can go check out? What you got going on?
Nah, just check out the channel. If we're sharing something that you find valuable, pay it for. That's all we ask.
Are you? I don't know. Are you still putting out stuff on YouTube?
Trying to stick with reels, but anyways. But thank you. It's a pleasure to join you as always.
Yeah, man. So everyone, I don't know when your spring break is. My son started, so if not, have a great spring break. Enjoy yourself. And like I said, if you're in North Carolina, message me and maybe we'll meet up. So